Good evening, MVP traders. Welcome to our webinar session. So in this webinar, we will be talking about two different topics, which is selecting the right type of value channel. Should it be static or shifting value channel? There's always been a confusion at times that how do we actually know whether the channel is actually static or shifting, either downtrend or uptrend shifting value channel? Because at times certain stock shows both characteristics. Because when you expand the time frame, it could be on a static channel, but if you reduce your time frame, it could be actually shifting. So how do we decide that? That's what we're going to look at it today. And secondly, how do we buy when stock's price actually breaks below a value channel support line? Because there's always been a question that, okay, we have our buy region around value channel, but when the price moves even lower than our buy region, which is between the buy limit of the value channel and the support line, how do we decide to buy? Okay, so these are the two topics that we're going to look at. So let's get started right away. So first, how do we know the right type of value channel? So that comes pretty much based on this criteria. So important criteria to select the right value channel, static or shifting. So at times it may be confusing to select the right value channel. In order to decide that, few elements that can be used to decide are financial instruments primary trend, financial instruments current trend. So that is why it's important to identify what is a particular stocks or equities primary trend and what it is current trend. Is it actually trading along with its primary trend, or is it trading against its primary trend, or probably could be a secondary trend? Okay, so before we go into examples, let's just take a look at few other points. So trading based on primary trend leads to a much bigger profit, whereas trading based on recent trend leads to a smaller profit, as the magnitude of price move will be usually smaller if the current trend is not the same as the primary trend. So for an example, when we look at probably 20 years data, all right, 20 years data, probably the stock actually shows it is going through an uptrend value channel, but that it is primary trend. But obviously it's not just going to go up all the way. There will be minor correction, or what we call as secondary trend. So when we are trading based on the secondary trend, obviously the swings are much smaller compared to the price swings that takes place in the primary trend. So we're going to look at this in an example shortly. Okay. One important confluence technique in value channel is the confluence of two different channels at the same level. All right. When the confluence takes place at support level, this usually brings a trend change, or at least a huge rally. This is where certain stocks, the primary trend is probably uptrend. Okay, and then the secondary trend or the current trend is actually a downtrend. So when both this meets at the same place for a buying region, and we have our MVP entry signal, that basically shows there's a good sign that that stock is going to move up a lot. Okay, so this is the theory part. So now I'm going to explain using real examples about all these theories. Okay, so let's move on to the real case example. So this is Pepsi stock, and I'm looking at around from 2013, all right, 2013 all the way up to around right now, which is 2018. And from this we can clearly see that the stock is actually going through an uptrend channel. This is Pepsi's primary trend, because we have this particular wave that I've been talking about. Okay, so it goes up, goes down, goes up, goes down. So this is where we have those higher high, higher high, higher high, and higher low. So this is clearly an uptrend value channel. So if this is the primary trend, let's look at what took place in Pepsi recently in this particular region that I have highlighted, because we had this what I call as a secondary trend. So all this move downwards, which is against the primary trend, is what we call as the secondary trend. So if we're going to zoom into this area, okay, we're going to look at how will it look like. So this is exactly what I meant. So if we zoom in to that particular secondary trend, and we can see right now over here, we have a downtrend channel. So it's pretty much straightforward. When you look at a much longer time frame, you are looking at the primary trend. When you bring down and zoom in further, then we are talking about a secondary trend. So when you are trading, basically you can trade based on both trends. For an example, you can trade based on this secondary trend, but obviously look at the price swing. The price swing is much smaller. The price swing is small. So that is why earlier I mentioned when you trade based on a secondary trend, that means your profit potential is small. So this is exactly what I meant. So the conclusion is when you trade based on the primary trend or you trade based on the secondary trend, there's nothing wrong on it. In this example, Pepsi primary trend is uptrend value channel. Correct. Secondary trend, Pepsi was on a downtrend value channel. Correct. Can you trade based on both? Yes. But the profit potential is, of course, when you trade based on primary trend, is much bigger than when you trade a secondary trend. Simple. All right. So let's go on to another example that I have actually prepared for you. So over here we have T. All right, AT&T. I think most of you all know. Again, I'm looking from 2008 over here, 2008 up to right now 2018. And if we look at these waves, okay, we can clearly see that it is in a uptrend primary. All right, its primary trend is up. Again, if you want to know how do I see that, is because from here it goes all the way here, comes down, and then goes up and comes down. So you can see over here higher high and a higher low over here, over here. So again, primary trend is up. Okay, so let's zoom in further and look at what actually took place recently. Okay, so over here, this is the region that took place recently. This is the secondary trend. So this is the secondary trend. This is a secondary trend. All right, so let's zoom in further into this particular region. So when we zoom in into this region, what can we see? It's an obvious downtrend value channel. Can we trade on this downtrend value channel? Obviously you can. For an example, we could have easily bought over here and we could have actually sold somewhere here or around here. So here, obviously we had a good profit. For an example, from $36, roughly between 36 to 37, and we could sell it around 42 level. All right, but obviously the profit potential is smaller. But if we would have traded the primary trend, for an example over here, this is a primary trend, look at the profit potential. So that we could have bought around 24 and we could have sold it around 40. That is much bigger. So this is exactly what I mean by a secondary trend gives a smaller profit compared to primary trend. Okay, so I hope this makes it clear that it is nothing wrong in both ways. It's just that which trend that you are looking at currently. So if you trade the primary trend, that's good. The profit potential is bigger, but obviously the number of time a stock goes back to the buy region of a primary trend is much lesser, fewer occurrences compared to for secondary trend, the number of time it actually reaches its buy region is higher. But of course, the disadvantage to secondary trend is the profit potential is smaller. Okay, so I hope that makes it clear, because I'm going to show the next point that I actually discussed earlier on. I mentioned about this particular point, which is one important confluence technique in value channel is the confluence of two different channels at the same level. When the confluence takes place at support level, this usually brings a trend change or at least a huge rally. What do I mean by this? So I'm going to go back again to the chart that I shared with you all earlier. So this is Pepsi, am I right? So earlier, Pepsi, this was its primary trend, true? So this is the whole primary trend. So what happens when we join both the value channel? So we have this uptrend value channel as the primary trend. We have this downwards secondary trend. And this is where the confluence region takes place. Look at this. Look at this area. This is the primary trend buy region. And this is where is the secondary trends buy region. So when we see a extremely bullish candle reversal at this area where it touches both the primary trend buy region and the secondary trend buy region, that is where a huge profit potential lies. All right, so this is a clear signal. Look at this. When the market opened, it opened much lower. Then after, it came back all up again. It shows the presence of buyers in huge volume. Look at the volume. So again, at this point, it took place at the secondary channel buy region and the primary trends buy region. That is a big goal for me. Okay, despite it coming back to that region again over here, we see another buy interest. So that is why you are able to see this huge rally that took place in Pepsi recently. All right, all the way from around $110 or $109 up to around $123. So again, the key is when the secondary trend buy region and primary trend buy region confluences with a bullish candlestick, that is a huge signal to buy. Okay, so let me just show another example. This is on AT&T again, as we discussed earlier. So this is the primary trend buy region for AT&T, and this is the buy region for the secondary downtrend value channel. So again, if you look at this point, it again confluences at both areas. So this is where the buy region for both the downtrend value channel, which is the secondary trend, and the uptrend value channel, which is the primary trend. So again, over here, you could see a bullish engulfing, all right, followed by a confirmation. So then after, we could be able to see a huge rally potentially coming up soon. So this is again where both buy region confluences. And each time when this happens, you could see a real spike in volume. This spike in volume is very, very important, because for both of this to confluence at the same level, it brings in the long-term buyers and it also brings in the short-term buyers. When both buyers combine, that is why we have this huge volume. All right, I hope that makes it clear on how we look at combination of uptrend value channel and downtrend value channel with the static value channel. All right, so at times the biggest focus should be on the primary trend. All right, and then look at what is the current trend, draw the channel for it as well, and you can trade it on both time frame as well. There's nothing wrong. You can trade both trends, just that the profit potential is different. And to make it better, if you are trading at the place where both the secondary trend buy region and the primary trend buy region confluences, that is a huge potential. All right, so I hope that makes it clear. So that's about it. So we are going to move to the next topic, which is this. Oh, just before that, let me just show you a case study on Kellogg's, or K. So here is the chart for K. Let me just show you all for a second, and let's see what we can see from that. So here, what you see here or right now, this is a clear uptrend channel in Kellogg's. Okay, so this is all our buy region over here, buy region, okay, and then we have our sell region over here, and then this is our channel, value channel, okay, control price. So it's clear we have an uptrend value channel. But when we look at the current trend, it is obvious that right now it is actually going through sort of a downtrend channel. So take a look at this. Comes here, comes here. All right, I'm just going to draw a rough line. Okay, I'm not going to go into too accurate about it. So then after we have moved it to here, our control price, so roughly around here. Yep. So this is where we have all our lines, which is a secondary trend. Okay, so again, the point is easy. The primary trend is up, secondary trend is down. You can trade both, but the secondary trend profit potential is much smaller. Look at this. So if you have been trading the primary trend, you can take a huge swing, probably from 37 to 60. That's almost like 50% return. Again, 45 to around 70, more than 70. That is about $30 of profit. But if you are trading the secondary trend, your profit potential is much smaller. 71, 76, that's about $5. Over here, 65 to around 70, that's another $5. But look at this, what's happening right now. We have the buy region confluencing together with the primary trend. So over here, this is our buy region. Let me just mark it. So this is our buy region. So it actually spotted together with the buy region of secondary trend, and we also have the buy region over here for primary trend, which is pretty much close to it. Okay, remember, it is very much close to it, which is below our primary trend buy region. So as we are approaching this part, secondary buy region and primary trend buy region, we are seeing a huge buying potential. Again, another sign, a huge rise in volume. All right, you could say, oh, this is earning, that's why the rise in volume, but you can also see before that, and you can see also after that, and you can see over here there's a huge spike in volume around these weeks because of the confluence between the primary trend and as well as the secondary trend buy region. Okay, so I hope that is clear. So I'm going to move on to the next topic for the day, which is how to buy when price breaks below value channel buy region. Okay, this is often a question that is asked to me. Kumar, that's fine, you have a buy region and at times the price breaks below it. How do I know whether the price will continue going lower or it is actually a buying opportunity? So this is where you got to remember, at times price breaks below value channel buy region temporarily before recovering back into value channel. This is mainly because at times when selling pressure is too strong, an insider needs more time to stop the drop. Okay, so again, as a market is like a tanker, huge tanker, it needs time to be stopped. The descent needs time. And another reason why at times it breaks below the buy region is because insiders wants to shake out retail traders. They want to get rid of all those retail traders, force them to sell by instilling fear into them, and they will take turn to buy it at a much lower price. Okay, so in order to go long during such a scenario, which is when price breaks below value channel buy region, look for volume anomaly at next immediate horizontal support. Okay, so price breaks below buy region, what you have to look for is you look for value anomaly at the next immediate horizontal support. This volume anomaly must come with higher than average volume. Okay, so volume anomaly at horizontal support and higher than average volume. Another key element that we can look at is, apart from volume anomaly at horizontal support, additionally we could also look for reducing body candle size as price approaches this horizontal support. So this is how it works. As the price breaks below buy region, to know whether insiders are buying or not, we look for volume anomaly, which is higher than average volume. And if the body candle size is reducing, but with higher than average volume, it shows that the insiders are buying at every single drop. Okay, so again, this is the theory part. I'm going to go into practical session. Let's take a look at these two stocks. IBM and CAH. Let's look at IBM first. So I'm going to zoom in into IBM. So this is IBM. So we have a channel so-called in this way right now. So it's a downtrend channel right here. So we have an up move, down, up, down, and such over here. So it clearly broke below our buy region. Am I right? So what I do is this. It went below the buy region. As soon as I see it goes down below the buy region, I will try to lock down my horizontal support. So over here, I have a horizontal support over here. You could see this region. Each time price touch this level, it rebound, 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 rebound. So that is why I'm going to select this level as my next immediate horizontal support. So we have my horizontal support around $120. The next point is, do I see any volume anomaly, which is most importantly higher than average volume? So over here we have higher than average volume, but I don't really see any volume anomaly over here at this point. So another choice is we could go into a shorter time frame to see if there is any volume anomaly. Because we are already below the buy region, we have higher than average volume. So when I zoom in further to this area, this is what I could see. If you could see over here, a huge red bearish candle with higher than average volume. But then after, we have a smaller body candle, small body candle with an even higher volume. This is a clear anomaly. All right, effort versus results. Here, the result is matched with effort, but over here, the effort is not matched with the result. A clear anomaly. Then after, I have a huge up move over here. So this is almost my buying confirmation. All right. So what I all did was this. I had a downtrend value channel. It came down. I identified my horizontal support. And then after, I looked for volume anomaly with higher than average volume. I saw that in daily chart. I got my confirmation. So I could go in around here. And that is how I was able to lock in this profit from around 120 to roughly around 180. Okay, so I hope that makes it clear. And just to make it slightly better, let's look at another example as promised, which is CAH. So again, CAH, we are in a downtrend channel right now. Downtrend, downtrend, downtrend. I was looking at this and the price broke below here. So this is another excellent example. So because if you could see over here, when the price broke below the buy region, I went on trying to identify my horizontal support. So my horizontal support, I couldn't see anywhere here. So I zoomed out further, and finally I could see support around here. All right, because the price broke all this way. Then after, the next support was roughly around here. Because if you could see over here, each time the price came to this level, rebound, 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 then next rebound here as well. So when I went back into this, I have identified my horizontal support. The next point is I want to look for volume anomaly. So here I had a huge break with a huge volume. Then the first anomaly took place because smaller candle, volume almost closed equivalent to the previous huge bearish candle. But I didn't get any confirmation. Went down further, another huge volume candle, went down further. This is a much higher volume, almost close to being a hammer. And then I had my perfect morning star over here. Again, all came with higher than average volume, and at the same time, it came with a volume anomaly and higher than average volume. So again, another additional point that I mentioned earlier, look at reducing body candle size. So over here, when it broke, you could see how the candle's body is small, and you could see tail at the downwards. All this shows that the buyers are accumulating and they are trying to stop the price descent. And right now, after this buy at around $58.92, the price went up all the way up to around 75 right now. Okay, so these are the kind of profit potential that you look at. And remember, when the price breaks below the buy region and you have the volume anomaly, and then with higher than average volume, more often it turns out to be a very huge profit. Okay, especially after it has broken and got back into the value channel, then it further gives us the confidence that this rally is just going to continue further. Okay, so this is pretty much what I have for you today. This is what I wanted to present to you about how you can actually use the combinations of all these value channels, about static, about shifting, volume, pretty much without any indicators. We are actually going into the stock market, finding out where the insiders are coming in, going in with a confidence, and then taking in our profit. I hope this session benefited you all. Thank you very much. Till I see you all in the next webinar session. Thank you.